We just saw the biggest home price decrease for single family homes since 2012 here in the Twin Cities. Hi, I'm Joe with Grey Duck Properties, your favorite Minnesota realtor. And what is going on in the Twin Cities? This is crazy. You guys have got to stick around and see this. We're going to get into all the data here and figure out exactly what is going on. Let's get right into it. All right, we are looking at the 7-county metro single family homes, not all property types, previously owned traditional sellers, and we are seeing a decrease from August of 400,000 down to 385. That is a $15,000 price drop in single family homes here in the Twin Cities in the 7-county metro. That is the biggest. I don't know if we can even go back that far. Let's see. It is the biggest that we have seen since August to September of 2010, when they dropped from 257 to 334. So we are now seeing house prices move down. Well, you know, this happens every single year, doesn't it? This is something that takes place every single year. We see our ups and our downs without a doubt, but this is the single biggest drop we have seen in 12 years here in the Twin Cities real estate market, and something to be aware of. Now, let's take a look at supply of homes here in the Twin Cities. The supply of homes actually stayed consistent at 1.4 months. And while we're at it, let's talk about some of these numbers here. You see, there's a big difference between a leading indicator and a lagging indicator. And home prices, sale prices, are without a doubt a massive lagging indicator, because when we are looking at the September numbers, these are properties that were put under contract a minimum of 30 days before September and up to possibly 60 to 70 to 80 days before September. So we are really looking at homes that went under contract in July, more than likely. So we are really looking at homes that went under contract likely in July. So it takes a couple months for those homes to close and show us what the sale price was. So we really reached our peak of the market, long before the June peak. It was actually a few months before that. It was likely in April that we saw the peak of our market here in the Twin Cities. Month supply, we remained steady at 1.4 months of inventory. Days on market did creep up from 12 to 15 months. Percentage of original list price, this stayed solid at 100%. I do expect this to fall just slightly here in the coming months. Now, a lot of people are wondering what is going on? How is this affecting our market? Is this a good time to buy? Is this a good time to sell? Mortgage rates are through the roof. They've come down now here in the past week, about a half of a point actually, from the high of like 7.6. They're now down to about 6.9 is what we were seeing this morning. So there's a lot of things going on. I want to look at some recent articles that were put out to give you guys a little bit more context, and I want to know your opinion about what you think is going on. Do you think our market is crashing? Do you think that this is the end of all this amazing appreciation that we have seen for the past 10 years here in the Twin Cities? Well, let's take a look at a recent article here. Western US continues to lead in home price value declines. So the West is seeing the biggest declines in the marketplace. Nationwide, typically home values fell 0.3% from July, the largest monthly decrease since 2011, according to Zillow. Home values did rise between July and August in 12 of the nation's largest 50 metros. Once we hit spring, we'll likely see home value appreciation pick back up, but very slight compared to where we were in the pandemic. It was crazy in the pandemic. What went on is unheard of and is never, ever gonna happen again. I can say that with all confidence. It is highly unlikely that we are ever gonna see a situation like that where we see these massive price increases. We will probably never see 3% interest rates again that drive the market into an absolute frenzy. We're likely going to see things leveling out long-term, maybe 0% growth before we go back to 3% to 5% typical growth. We typically see 3 to 5% as appreciation. Those are normal numbers. That is what we're going to go back to seeing after we get over these crazy mortgage interest rates. So how is our market staying solid here in the Twin Cities? We are much different than a lot of other states around the US. Out in the West Coast, Florida, Boise, Phoenix, Las Vegas, these places are seeing some of the craziest movement we have seen in any areas as far as prices going drastically through the roof and then coming so far down. So how are we different here? What is going to make our local housing market stay strong? Well, here is an article from the Business Journal, and this is a nationwide article as well. Housing inventory may not rebound for some time despite slowing market. So this is one of the biggest things that I really want to touch on today, is that even with home prices starting to decline here in the Twin Cities, which they do every year, our housing market should remain strong. There is enough buyer demand out there for the low inventory that we have to continue to keep home prices stable. All right. And while new construction had a comeback in response to demand during the pandemic, home builders are quickly pulling back. So with home builders pulling back, again, that's keeping our inventory low. These builders said, you know what? I don't want to be left with my pants down like what happened in 2007, 2008, and we're going to stop building so many homes. We're going to slow down, and we are going to only start building homes when somebody is actually ready to buy those homes. Single-family housing starts in July, the most recent data available, were at a rate of 916,000 or 10.1% less than the revised June figure of a little over 1 million here, according to the U.S. Census Bureau. All right, I think that there are a significant number of homeowners who are locked into very, very low mortgage rates, and we've seen people who are staying put, living in their homes longer, and renovating instead of moving. This is something that we are seeing. We're calling it rate lock. It doesn't make a lot of sense for most people that have refied over the past few years, that have between a 2.5% and 3.5% interest rate, to all of a sudden move and have to get a 6 to 7% interest rate. It just doesn't make much sense. So they are rehabbing their home. They're doing an addition. They're making it what they want. Because of this, length of home ownership is actually increasing. The average number of years, I believe it used to be at like 8 years. Now it's up to 13. Inventory will likely remain lower than a balanced market for the next 3 to potentially 8 years. Given the average time of a household remains in a home is now 13 years. New listings are actually down year over year about 20%. We are definitely seeing that. Homeowners who bought and refinanced their homes at or below a 3% interest rate are 7.6% less likely to list their homes right now. And that's a low percentage, but it's very, very true. Interest rates would have to fall in order to incentivize a lot of homeowners who are sitting at sub 4 interest rates to come back to the market. It just, like I said, doesn't make sense for people to make a move and have to pay these drastically higher interest rates than what they currently have. But Joe, the market's going to crash. Yeah, there's foreclosures coming. There's foreclosures coming. I feel like it's Paul Revere or something like that. Foreclosures, the year over year data is really, really scary. But when you actually look back in time to see what's really going on in the foreclosure market, it's surprising. Take a look at this. Adam is one of the best sources for real estate information about the housing market. Increased foreclosure activity in first 6 months of 2022 approaches pre-pandemic levels. Yeah, let's look at that. All right, so first quarter, 164,000 foreclosures. 2021, 65, almost 100,000 more foreclosures. But now we're just getting back to 2020 levels. And we're more than 100,000 below where we're at in 2019. And look at the numbers of 2018. Let's go back to 2012. There was 1 million foreclosures. 1 million. And we are at 164,000. It's just not going to happen where we're going to all of a sudden see a flood of foreclosures come to the market. People are equity rich in the United States. And that, my friends, is the next thing that I want to touch on. Right here, almost half of the mortgage homes in the U.S. now considered equity rich. We are an equity-rich country. So what does that mean? Homeownership has reached a milestone in the US. Nearly half of mortgage properties are considered equity-rich in the second quarter, meaning owners had at least 50% in home equity. This marked the 9th straight quarterly rise fueled by soaring house valuations in the pandemic era and an increase in down payments by recent buyers, according to real estate data provider Adam. 50% equity. That is an awful lot. That means that foreclosures are not going to happen. Our market would have to drop 50% in order to see a bunch of people go back underwater. We are stable with where we're at right now. Although the housing market has cooled recently, the percentage of equity-rich properties will probably keep increasing, according to Adam. So they also believe that we are going to see home prices go up. And when home prices go up, the other thing that's going up is rent. You see, we're in a very, very interesting market. The rental prices have gone through the roof over the past couple years. And as housing becomes more unaffordable for the everyday American, more people are choosing to rent. Well, when more people are choosing to rent, what does that do to the housing, the rental market? It causes rent prices to continue to go up. Interest on rental is 100%. You can either pay your mortgage or pay somebody else's. It's up to you. But rents are going to continue to go up. Let's take a look at this article from CNBC. Rent prices will continue to go up in 2023. Here's what to expect. Last month, median rent in the nation's 50 largest cities fell by 10%, by $10 a month, the first drop since November. But a 1-month decline is not necessarily the start of a long-term trend. In fact, rent price growth will likely remain elevated well into 2023. My expectation is that rent growth will slow, but we may not see it go back to what it was typically before the pandemic. Rental demand will remain strong due to rising home ownership costs, especially with mortgage expense nearly doubling since January. This has forced many would-be home buyers to stay in the rental market, exacerbating the already high demand. So just like I just talked about, year-over-year rental price growth will rise from 5.8 as of June 2022 to 8.4 in May 2023, according to the Federal Reserve Bank of Dallas forecast. Similarly, an upcoming Moody Analytics forecast predicts a rent growth rate of 5 to 7%. Rent prices are going up. That's not going to change, but it is going to continue with housing prices going up as well. Everything's going up. Yes, we are seeing a decrease here in the Twin Cities, but that is what takes place every single year. So what's going to happen with mortgage rates? Well, Forbes just put out an article about that. Mortgage rate forecast for 2022 for the rest of the year. Let's go down what I have highlighted here. Where rates in the 7% range were nearly unthinkable in August, with the 10-year Treasury touching 4% this week, we can expect rates to move into the 6.5% to 8% range through the remainder of the year. That's right, rates could likely go up to 8%. They could possibly go to 9% by the time this year is over. With the Fed raising the Fed rate, they're trying to check inflation. This often causes mortgage rates to go up as well. So what does this mean for you in this current market? Well, you tell me. I don't know what your financial picture, what your living situation is. The best time to make a move is when it makes sense for you. When you decide that the pain of living wherever you are is too much, when that noisy neighbor, the barking dog, or you've outgrown the house because your kids are growing up and you need more space for them, or kids have moved on and you're downsizing. The time to make a move is when it's best for you. Yes, interest rates are really high right now, but right now is the only time in the past 2 years that you were able to purchase a home for its value and possibly get it a little bit undervalued. Getting a home under its value is not something that we've seen in the past 2 years. You had to pay $25, $35, $50, $60, $70, $80,000 over the value of the house just in order to buy a home. Yes, mortgage rates were low, so it seemed like a safer investment and something much easier to do. Rates are high right now. I understand that. One thing that we are doing big with a lot of our buyers right now, and some of our sellers with listings that are not selling right away, are starting to offer an incentive, and it's called a 2-1 buy down. Now, this is paid by the sellers, and it allows a buyer to have a 2% less interest rate the first year of their mortgage. The second year of their mortgage, they have a 1% less interest rate than whatever they locked in at. The third year goes back to the number of where they locked in at. Well, we are coming up on an election year here, and history does show us that during election years, interest rates come down. So once the Fed gets inflation in check, we expect to see interest rates come down. When we see when the election year comes up, interest rates will likely go down. Great time to refinance. But let's think about that. What is going to happen when interest rates come down? And all of these home buyers that have been sitting on the fence for the past year and a half, 2 years possibly, because it's just a crazy market. When these rates come back down to 4, even 5%, there is going to be a flood of buyers in the market, and that is going to push home prices up, up, up. This is what's going on in the Twin Cities. If you want to talk about this further, if you don't agree with it, let me know in the comments. Tell me what's going on. I would love to hear your perspective on it. I would love to see some data that shows this is going to be different. Otherwise, I'm not seeing it. I'm an eternal optimist. I'm an optimistic person. I really do see the good in things and understand that this market, yes, it might be difficult right now, but the silver lining is you can get a home for much less. I'm your favorite local Twin Cities realtor, Joe Schwartzbauer with the Great Oak Properties team. We'll see you next time.